Hello, welcome to Let's Go Money. In this channel, we will provide daily trade ideas on the progress of major index and blue chip stocks. Trade ideas will be based on wave theory with the help of few technical indicators, which we have deployed for the past 10 years. Please note that all trades or details provided in this channel is for education purpose only. In this video, I'll go over the basic concepts of wave theory. Let me explain it with an analogy of a sea wave and a surfer. Sea waves always appear in intervals. The height and velocity of the wave is based on many external factors. It may be due to wind, gravitational pull, distance of the moon, etc. Whatever be the reason, waves are continuous, and what we know is there will always be another wave to surf. If you can identify it, you will not be pulled into the sea. Instead, have fun riding the wave to the shore. Similarly, there will be waves in stock market as long as there is stock market. If you are not ready for a particular wave, you cannot ride that wave but need to wait for the next one. That simply means we should not have the fear of missing out. Hopefully, I've given some clarity on what you can expect in our videos. Like a weatherman, we are going to forecast the wave patterns. Some may be right, some may be wrong, some may be a total disaster. Let me explain what a wave is. A wave consists of two components. One where it gains momentum and brings water to the shore. The second where it dies down and takes the water back to the sea. The part which gains momentum is called impulse. The part where it recedes to the sea is called correction or consolidation. The whole process happens in regular intervals. There is a wave with an impulse followed by consolidation, again an impulse with the consolidation followed by next impulse, and this process repeats. What are we going to do with this? Before we enter a trade, we are going to identify where the price action is. If it is in an impulse, we should not get on it. Instead, wait for the wave to complete the impulse and consolidation. After this, we will identify an entry point on the next wave impulse and we'll take a trade. Then we'll monitor the momentum of the wave to find an exit point. We have to then wait for the consolidation before we enter the next trade. So this is the basic concept of wave theory. I can show a particular chart on how it works. Let's take Nifty, which is shown in this chart, and we are in a weekly time frame. So here you see this is an impulse followed by a correction, and in a lower time frame you can see an impulse, consolidation, impulse, consolidation, and followed by another impulse, and then we have a big correction and then followed by the next wave with an impulse. So any stock or index always moves in waves, and we are trying to identify the pattern and understand the price action and try to forecast the start of the next wave. We will be using a few technical terms in our video. I'll give a brief explanation and I will try to keep it simple. I have prepared a pre-prepared chart, and this is shown in a weekly time frame as well for Bank Nifty. And I have already marked all the technical indicators and patterns which we will use in all our analysis and trade ideas. Most traders might know all these indicators, so I am going to give some brief introduction for newbies. The first one is the trend line. The trend line shows the price movement or the direction of the stock. This is to know if we are in a bull market or a bear market. And as you can see, Bank Nifty is in a bull market in a weekly time frame. Second indicator is the MACD, moving average, convergence and divergence. MACD provides the momentum of the wave. With this, we can analyze which part of the wave we are in. And I have superimposed the MACD on the candle bars for us to give a better visual experience. Third is the Fib, which is nothing but the Fibonacci series, which we use with a little modification on the retracement levels, and it's based on back testing and some algorithms, and this will guide us on entry and exit points for our trade. The fourth one is the structure or pattern. It is not a predefined indicator. This is where the wave concept actually comes into play. Impulse in a wave is pretty straightforward. It happens with momentum, like the name, it's impulsive. But the correction happens in many different ways. How do we identify it? It has many options, and understanding this is important to find the next wave we are really interested in. This is the bigger and most important concept and can't be explained in a single video. You will be exposed to this concept in bits and pieces as we proceed through individual analysis and trade ideas. To summarize, trendline, MACD, Fibonacci and structure/patterns are the four indicators you will see in all our charts. We are planning to have 3 series of videos. The first video is the trade idea, and this video will be posted when a trade idea is triggered. Each trade idea will be in a separate video. The other 2 videos are on a weekly basis, which are weekly trade report and weekly stock analysis. Stock analysis video will analyze major index and blue chip stocks on a weekly basis. The trade report video will analyze the progress of our trade ideas on a weekly basis. Thumbnail will be green or red depending on the direction of the trade, that is gain or loss for that week. All the trade ideas and its progress will be tracked in a separate spreadsheet and will be published in our weekly trade progress video. We also have plotted the percentage weekly progress in the chart. We have another chart which compares the account percentage growth to Nifty. Why do we need this? If you are not beating Nifty, the trade we do doesn't make any sense. This comparison chart will help us decide if we have to continue doing this or change our approach to trading. Hope this helps. So stay tuned with our channel. We will try to guide you to get on many good waves and rescue in case of tsunami so that we won't lose our account. Thanks for watching, and I'll see you in our next video.